Hey, everybody. It's your boy, Sean McLaughlin, at Options Sean on Twitter. Today's February 2025. I hope you're doing well. Let me adjust my mic here. Sorry. Hope you guys are doing well. It's been an interesting week. We don't have a whole lot to talk about today in All-Star Options. We did not have too many exits or any exits of positions. We did adjust the position, which we will talk about. And we will review some updated stops. We have a few updated stops to go through. And we'll touch on new positions that we've put on over the last week. The Killer Bees. All three positions we put on in the last week have all started with the ticker letter B. The Killer Bees. And one of them is looking like it might be a killer. So that's good news. All right. So before we drop into get into anything too deep here, let's just drop the old disclaimer that everything we discuss here is for educational purposes only. I'm showing you what I'm doing with my money, and I hope that you're learning something at the very least from following along with it from what I do. All right, so let's start as we often do at the high level. Let's look at the S&P 500. You can see here, I have a little red candle here today. We're down a little bit. What are we down? I don't know, 65 basis points today. No big deal. But coming off a new all-time highs just yesterday, at least intraday, we hit new all-time highs. So in spite of all the news out there, in spite of everything that's got everybody all worked up, stock market still thinks things are good. And you know what? We only get paid by being on the right side of the market. And right now, the right side is going higher. So, regardless of what you feel about the news cycle, don't let that affect your investing, okay, or your trading, because none of that matters. The only thing that matters is price. And with the S&P, just off of all-time highs that were set yesterday, the Nasdaq just a couple days removed from new all-time highs, things are looking good. Now, interestingly, VIX is at the top of my list here. A little spike today in VIX, but maybe that's not all that interesting because we're down on the day. So VIX tends to rise when stocks are falling. So no big deal, but certainly VIX is not anywhere near red flag levels. We're now trading with a 16 handle, still well below where we were numerous times in the previous 3 months. So as far as I'm concerned, where I stand, feels like the market is bullish. The path of least resistance is higher. And the more people hate that, the more I like it. Okay. So glad to get that out of the way. Now let's just talk about, we only have one position that required any adjustments this week. And unfortunately, it's a position that while we still have the potential to win in hindsight, and all we have is hindsight, right? In hindsight, I'm looking at this trade and I'm thinking, well, we had the right idea for being bullish on FXI, but we just have employed the wrong strategy. So we got into this trade back in November, right here. We were buying into this, what looked like a consolidation, and we thought we'd go higher from there. We bought the January 2026 35 strike calls for a $30 debit, but we didn't just do that. We created a calendar spread that morphed into a diagonal spread. We've been selling calls against this position to lower our net cost. And as you can see, every one of these circles here shows a point in time where we adjusted our position, meaning we rolled our calls aggressively. Okay. So when we were going down here, 1, 2, 3, these three spots here, we were our short calls were losing value, which is what we want them to do. So we were rolling them, we were closing the short calls and reestablishing at the next month, and in a couple cases at a lower strike to bring in more credit. But now, since this big rally that has begun in middle of January, these last four rolls here, our short calls have gone in the money. So in a way, we're playing defense. We're trying to play keep away, right? We don't want these short calls to go in the money. So we've had to roll them up a strike and out a month. And most of the time we did that for a credit, but you can see here down below, I got every adjustment laid out. On the 14th on Valentine's Day, we actually had to do one roll for a debit, which is a bummer. But we've done a number of credits or number of rolls. And so here we stand right now. As the position stands right now, we're still long those January 2026 35 strike calls. But following today's roll, we are now short the December 36 calls against it. Our net debit in this campaign right now totals up to 80 cents. Okay. Right now, if FXI were to collapse and go to zero, the worst case scenario is we're walking away losing 80 cents. Okay. Now, if FXI rips higher from here and we don't make any further adjustments, the most the spread can be worth is $1 because we are long the 35 calls in January and we are short the December 36 calls. So there's a difference of $1 there. Okay. So $1 is the most we could sell that spread for if FXI goes to 100, let's say. We'll be able to sell that spread for 100 or for $1, net that against the 80 cents debit that we have in the trade so far. I should drop my mouse again. So we would walk away a 20-cent winner. And that is not the type of win we were looking for. But the good news is we still are in a position to win. Now, this trade is not over. Okay, there is one more roll we can do. Actually, there's more rolls we can do, but the next roll for me is if we get up to the 37 level here, right? If we get to 37, putting our December 36 calls $1 in the money, I will roll those calls one more time. I will roll them to the January 36 calls. Hopefully I can do that for a credit, but it might be a small debit. And at that point, we now will have a vertical spread. We will be long the January 35 calls and short the January 37 calls. The most that spread could be worth is $2 at that point, increases our potential profit in the trade. And if we want to continue being aggressive, and we'll make a decision when we get there, and it looks like we might have to, but maybe what'll happen is once if FXI just keeps going higher, then we'll have a decision to make. Our decision will be we can either close the spread, the vertical spread, and book our profit. Not the profit we were looking for, but a profit nonetheless. Or we could just do vertical rolls, rolling those short strikes up, but staying in the same expiration month, staying in January, just, buying the 37s and selling the 38s and selling the 38s and buying the 39s. It'll cost a debit every time, but in effect, that will be adding to a winner. Okay, which is a good best practice to have. It's always a good thing to add to your winners. I shouldn't say always, but it is often a good thing to add to your winners. So if you want to, if you're still bullish, or if I'm still bullish, we could still vertical roll those calls up, staying in the same expiration. The spread gets bigger, the potential profits get bigger. But we'll cross that bridge when we get there. But for now, we have rolled once again for the fourth time in 2 weeks. We've rolled our calls up to the December 36 call strike. We did it today for a 30-cent credit. All right. So that's all we have now for any portfolio action. We didn't have any exits, nothing exited for a profit or a loss. That's the only thing that we had to do this week. So let's get into some updated stops. We just have 3 updated stops to work with. First up, in no particular order, we'll start with BK, Bank of New York Mellon. We're long the June 92.50 calls that we paid $1.90 debit for back in late January. It's starting to go our way. It's not going our way as quickly as we'd like it to. So we're not really sitting in any gains here in this trade, but it is showing signs of going in the right direction. And I have raised my stop now up to the 82 level. You can see right there. I don't want to see Bank of New York Mellon get back below 82 because that would tell me 2 things. Number one, it'd be back below the 50-period moving average, which is not something I like when I'm bullish. And it'll be below this previous level of resistance. And resistance tends to become support in a good, healthy uptrend. But if that resistance or that support gets broken, which below 82 tells me that it is broken, that is no bueno. So for those 2 reasons, below support, below 50-period moving average, if we get below $82 a share on a closing price basis, I will exit the trade and get out. But that's the new stop there in BK, 82. Next up, Dash. Now this trade's going our way today, notwithstanding. Pretty ugly candle today, which I'm not too happy about. But we are long a June 200, 250 bull call spread that we paid $8.54. We've been in this one for a little while now. We got it in mid-November. It's going our way. We're sitting on some profits here, but we're holding out for more. But in the meantime, I raised my stop to 180. 180, also similar to BK, corresponds with previous resistance. You can see here. Previous resistance around 180. So I don't want to see Dash get back below 180. That would also be below the 50-period moving average. 2 things I don't like. So we see a closing price below 180, then we will exit Dash. Lastly, the next new updated stop is Visa, ticker V. We are long a call diagonal spread. In this case, we were short the March 360 calls and we are long the June 375 calls. We paid $3 for this. You can see I got the 360 level highlighted up here. That's the strike price for our short calls. If that level gets broken, if we go higher, then I will look to roll those March 360 calls up to May, preferably May, and maybe to the May 365. Hopefully for a credit, that would be the ideal situation. Again, we'll see what the prices are when we get there. And by the way, all of these updates and all these position adjustments, whenever they happen, I always alert members of the All-Star chat room, All-Star options chat room, as I'm doing them or soon after I did them. It's not always immediate, but it's as soon as I can. And so if you're a member of All-Star options and you're not in the All-Star options chat room, I know there's a few of you. I'm not sure what you're holding out for, but please get in the All-Star options chat room. That's where you'll get a lot more real-time action. And you're not just going to hear from me. You're going to hear from all kinds of members of All-Star options. Everybody's in there sharing ideas, venting their concerns, celebrating their wins, all of those things. It's all in there and we'd love you to be a part of it. So please get in there and you'll see, you'll be alerted when things need to be done. In fact, when we were adjusting our FXI trade today, I was in there telling everybody, hey, I'm going to be rolling. I'm going to be doing this roll. And then I did it and told them how we did it and the price you can get. And there you go. There's the benefit. All right. So that's it for updated stops. Lastly, we will touch upon new trades we've put on this week. I told you killer bees, right? So all three new trades we've put on in the last week all start with the letter B. That's not by design. That's just coincidence. Now, for every one of these trades, guys, if you're not part of All-Star Options, I publish a detailed trading blog or a detailed post that details every bit about this trade, details the setup and what I like about it, the option strategy I'm going to use, how I'm going to size my position, how I'm going to manage risk, where I may stop out for a loss, where I may take profits, where I may make adjustments. All of those details are laid out ahead of time, so that you have a game plan to go forward and make this trade your own. So if you want the trade details for these trades, please become a member of All-Star Options. We'd love to have you and we'll get you involved. But for now, I'll just give you the high level on these trades. Baker Hughes, BKR. We are long BKR. We got into this one a couple days ago. We think this is a great setup. We think this is going to continue higher. So we are in BKR. Next up, BABA. This trade, we got into this trade for a very specific reason. This is a bullish bet. We got in because we believed that the earnings were going to be a catalyst to send this stock higher. It's already had a big run up. And I told people in the blog post, this is a hard trade. And it's understandably, right? The stock has run up from $80 to 120 almost nonstop over the past month. Yeah, this is a hard trend to buy. And when you look at this 1 year chart, yeah, it's hard. But this is what got me excited. When I zoom out, if I do a weekly chart here, look at this. When you look at the weekly chart, we're just getting started breaking out of a base here. This thing could go to 300 and we still won't have recaptured all-time highs. So that's what's got me excited about this name. And we had the earnings event this week that I felt would be a catalyst to send this stock higher. This stock that nobody probably wanted to buy because of this run up. And you know what? When people are afraid of putting a trade on, those are often the trades that work out the best. And so I'm in BABA, got into it on Tuesday. So far, so good. It's come significantly back off the all-time highs or off the highs this morning, but we're still heading in the right direction. The earnings really certainly didn't scare anybody who's bullish this name. So yeah, maybe there's a bit of an overreaction to the upside today. That's okay. But we're off to a good start with BABA. Again, all the trade details for this plan are available on the blog. Finally, Box Inc., ticker BOX. We got into this one, excuse me, yesterday. Similar to BABA, this one is a anticipation for earnings being a catalyst. I don't like the candle that we have today, unfortunately, but our stop is at 33. We got plenty of room there. This is probably just a normal shakeout because we have earnings coming up in a couple of weeks on March 4th. And listen, guys, look at this chart. Look at this chart over the last year. Let's zoom out a little bit here. Gonna zoom out. I can't really, I'm having trouble with my mouse, but we have almost a year's worth of data right here. And you can see this chart is going from the bottom left to the upper right. And I talked about it on the morning show this morning with JC and Steve. And if there's going to be a surprise, I put surprise in quotes, but if there's a surprise earnings reaction following the March 4th earnings, those surprises tend to be in the direction of the underlying trend. And this is why I'm bullish on Box. I think that if we have a surprise, it's better odds of a surprise to the upside than to the downside. But if it goes to the downside, that's okay. We have defined risk. We're willing to lose what we've invested, or I'm willing to lose what I have invested. It could go to zero and I'm fine. Okay. But if I'm right, we are positioned to 10x our investment in this trade. So find all the details for that at allstarcharts.com. Go to the member section, go to the options section. You'll get all the details for all of our trade plans. Hope you'll be involved. All right, guys. Last up here, you guys like to have the updated stops. A little reminder, there's a screenshot. If you need to take a screenshot, please take it. Those are the 3 stops that we updated. And lastly, if you have any questions at all, please shoot me an email. Hit me at info@allstarcharts.com. That will get routed to me. I'll be happy to answer my question or answer your question as best as I can. And if you're not involved, please go to stockmarkettv.com/get all star options to get involved. We'd love to have you here in the community. It's a great community. And you like my charts? Trendspider.com. Use promo code Sean50 for 50% off a subscription to trendspider.com. All right, that's all I got for you, folks. Have a great weekend. Oh, programming note, guys. On Saturday in 2 days, me and my family are heading off for a long overdue vacation. We're heading to Jamaica, Mom. Getting out of this cold here in Colorado and heading to some warmth. So next week, I will not be at my normal cadence with communications. I'll be around. I'll be checking on positions. I'll be in the chat in the mornings. So you'll be able to reach me there, and if there's any updates, any trades, I'll let you know. We'll be there. As far as new trade ideas go, I'm not sure if we're going to have new trades. If we do, I'll just kind of put out the details and leave out all the fluff and just get to the point of it. But hey, if you're not a member of All Star Options, I should have put this in the chat. I'm sorry, but all next week, in my daily free e-letter, options e-letter that I post something out almost every day. All next week, I'm going to be doing a thing where I'm going to be sharing a lesson about the various strategies that I use here in All Star Options. We're not going to cover every strategy under the sun, but we're going to cover the strategies that I use most often. And we're going to get really in depth of how I use them, when is the ideal time to use them, and how I manage risk and take profits in all these different strategies. So if options trading is still relatively new to you and you don't have you don't feel confident or comfortable with what may seem like complicated spreads, well, tune in this week on my newsletter. We'll be sharing lessons, and I think you'll get some value out of it. Even if you think you know everything about iron condors and strangles and vertical spreads, a little refresher never hurts either, right? I'm refreshing my skills all the time, reading up on new things about strategies I've been using all the time. So please subscribe to my newsletter. I'll drop the link here in the chat here once I'm done. It'll be there in the chat. And it's free. And you'll get it in your inbox starting this weekend. All right, everybody, that's all I got for you. Have a great week. I'll talk to you sparsely next week, but we won't be doing a jam session next week. So I'll see you in 2 weeks for the next jam session. All right, everybody, be well. See you next time.